Hey guys, what's up? Alec back with the daily stock market and a fairly green day in the stock market again. It's safe to say that the bull market is back now. We'll dive a little bit more into that into this video. Tesla stock up 4% on Friday, now at $243 per share. And the question is, will it hit $250 per share again this week, or will it trail down closer to $135 per share? Personally, I think that Tesla will keep going up and we will see $250 per share this week. In this video, we're also going to be talking about Nvidia, AMD, and also Intel. So a good semiconductor chip maker update. All right, so first up we have Nvidia, but before that, just smash a thumbs up on this video, share with a friend if you think that there's value in this video, and subscribe on YouTube with post notifications on. Now with that out of the way, we see Nvidia up 34% in the past month. Okay, we've seen it consolidating ever since around end of May 26th. Nvidia really hasn't been doing much. So the question is, will we see another breakout happen with Nvidia, or will it start trading down and selling off from here? Now, if we pull up some technicals, we can see that it has been making lower lows. So May 31st, we saw 378. June 7th, we saw 374. So there's the lower low there. Again, if we see a lower low than that 375, 374, that's going to be an indicator that Nvidia is going to start trading down. We're also seeing lower highs. So here it's at 412. And then it only went to 398. So if we can break into higher highs for Nvidia above $400 per share, that's when Nvidia starts becoming bullish once again. So here we have an analyst article from 2 days ago about Nvidia. Keep on buying Nvidia, says JPM Morgan following investors meeting. With AI hodging all the headlines this year and many of its offerings catering to the needs of those building AI tools, Nvidia has positioned itself as one of the companies to ride this huge secular trend. To wit, Nvidia shares are up 165% year to date. It's no wonder then, after hosting a meetup between investors of Nvidia's VP and JPM's analyst came away confident in the chip giant's ongoing success. In fact, Sir still thinks the stock has more room to keep going higher and keep running. Along with his overweight buy rating, the 5-star analyst $500 price target implies the shares will add another 29% over the course of 12 months. Okay, and this analyst has a good track record also. So what's behind the optimistic outlook? Well, for one, the analyst assured of its continued strong growth profile based on multi-quarter order / backlog visibility for its data center segment. Shipments of Nvidia's fastest AI GPU so far, the H100, continue to ramp in higher volumes in Q2 and into the second half. At the same time, its predecessor, the A100, is still witnessing strong demand. So that's good as well. That said, aside from the boost anticipated in the second half of the year coming from the new chip, the H100 compute platform, other big revenue generators are expected to come into play shortly. Wow, so that's another bullish thing because, yeah, the A100 did good and its successor, the H100, is projected for big revenue, but there's also expected more to come into play also. So again, watching those technicals on the supports and resistance is going to be very important this week to see if Nvidia could trade higher than $400 per share and continue its trend upward. However, I'm staying away from swing trades and buying on Nvidia. The only thing I'm really doing on Nvidia right now is dollar cost averaging in. That's the best thing to do because there's no telling what Nvidia is going to do. However, if it drops under $300 per share and gets closer to that 275 mark, then I'll be buying a couple shares at a time and buying larger amounts of shares at that price point. And we'll also revisit Nvidia time and time again. So I'll constantly be making updates to my price targets. And we'll be revisiting Nvidia stock a lot on this channel in the coming months. So make sure you subscribe with post notifications on to keep updated with all my price alerts and different price points I'm looking at, because as Nvidia plays out, goes higher or goes lower, definitely have to change your price points and your targets and goals for the stock as well. Okay, moving on to AMD. Can AMD follow the success that Nvidia is having? Right now, we see it up 27% in the past month. We see that resistance closer to 126, 127 per share, and that support closer to 118. So if it makes a lower low below 118, 117, that's going to be very bearish or negative for AMD. And if we see it trading above 125, above 126, and making higher highs, that's going to be some good news and some bullish momentum for AMD. Now, something to consider is that AMD has 73% institutional ownership. Wow. It's amongst the favorite, it's a favorite amongst the big guns. Institutional substantial holdings in AMD implies that they have significant influence over the company's share price, which is always a super risky thing if you're planning to hold for long term, because they could dump the stock. Another huge red flag for AMD is 46% of the entire business is held by only 25 shareholders, which can easily manipulate the price if they wanted to. One of AMD's biggest competitors is Intel, who we'll talk about next. AMD has its sights set on Intel's dominant server CPU market share, okay? And it really wants to be compared to or even superior to certain Intel chips in many benchmark tests. Some bearish things to watch out for and AMD for long-term investors is the lack of size may make it difficult to maintain momentum against the likes of Intel and especially Nvidia, and even Apple now has its own chips that are way faster than Intel, something to consider as well, which have considerably deeper pockets, and Apple has some of the deepest pockets of them all. Okay, Nvidia is ahead of AMD in GPU technology and has also been incredibly successful leveraging its GPU into adjacent end markets such as artificial intelligence, AI. Nvidia is talking about AI so much. And those clips of people counting how many times Nvidia says AI in their presentations is almost funny at this point. Intel remains the dominant player in processors market and hold long-term advantages over AMD in aspects ranging from research and development, marketing, pricing, deep pockets, cash equivalents. Intel is dominating that. Nvidia is dominating Intel, and Apple is basically dominating everyone right now because Apple is making their own in-house chips now. So these stocks are definitely risky because Intel could wipe out AMD, right? And Nvidia could wipe out Intel. And Apple could wipe them all out in the future, or there could be two dominant players, Apple and Intel. Or even Apple and Nvidia. No one really knows, but the two leaders right now, I would say, are Apple and Nvidia. Okay, so let's talk about Intel a little bit at $31 per share. This is one of the best ones if we're talking about current price, because if we pull out to the monthly chart, we can see they're only up 5% compared to Nvidia and AMD, who are skyrocketing their shares right now. The last 3 months, only 18%. And in the last year, they're down. Okay, so basically no semiconductor stocks are negative on the year right now, like AMD, Nvidia, and all the ones we're talking about in this video. And in the last 5 years, it's down 42%. So this could be a big buying opportunity for Intel at $31 per share to $25 per share. However, remember, it's just risky because you have those big players like Nvidia and Apple who go wipe Intel out. Now, when it comes to Intel, they're down significantly on the year in the last 5 years. So I want to see what's going on if their balance sheet and income statement kind of reflects that. So first up, we have a total revenue pulled up on their income statement. And we can see that, yeah, they dropped a little bit in 2022. but only 20%, okay? And they're still on track for 63 billion in total revenue. If we look at the quarterly, however, things are really not getting much better. With we can see a steady downward trend happening with Intel. Okay, now we have the income statement for net income pulled up for INTC Intel, which is extremely important to look at. And look at that income. It's fantastic for the last 4 years. However, it fell 60% in 2022. But to consistently hit 20 billion in net income is absolutely bonkers. Considering, I mean, do you guys even know what Nvidia's net income is? You guys, if you invest in Nvidia, you should know the net income. Their net income is closer to 5 billion. So Intel was doing around 4 times the net income that something like Nvidia was doing, and Nvidia's market cap is significantly higher. So Intel could be undervalued. However, it's a risky play right now just because Nvidia could come and take that market share. We see the net income for Intel in 2022 only at 8 billion, which was a 60% drop off, which is absolutely huge. And look at that. So this is the real reason why we see Intel stock absolutely plummeting and dropping like crazy right now. Because remember, they were doing 20 billion a year in net income, not total revenue, net income 20 billion a year. And now look at their quarterly chart. The last 4 quarters, they've been completely unprofitable, losing as much as 2.7 billion in 1 quarter. This is very, very scary for a company to see that's doing 20 billion in net income consistently, and then all of a sudden they can't even make a profit. You know, forget 20 billion, forget 10 billion. They're not even making a profit now. So this is why it's extremely risky investing in Intel right now. But if you believe that they can turn it around and get back to even that $10 billion range in net income, then the shares could absolutely skyrocket. They also have a really great balance sheet, 45% debt to asset ratio, with their assets at 185 billion. Their assets are absolutely massive right now, which makes me comfortable as an investor. But if we start to see that rising up, that debt to asset ratio, that's going to be a huge red flag. But as long as it stays under 50, even under 60% on the debt to asset ratio, that makes me feel a lot more comfortable investing in Intel. However, it's just that net income on the quarterly chart that's really scaring me as an investor or a would-be investor. So at the current price, Intel is by far the best deal. They're also a dividend stock, paying around 3 to 4% in dividends, so check that out as well. But also, Intel also holds the card for the riskiest stock in this video as well. It has the most potential, but it also has the most risk. So I hope that got you a little bit more prepared for this trading week ahead. And for long-term investors, I hope it kind of let you know which stock to watch out for and which stock to have on your watch list and which stock to put in your risky portfolios and which stock to dollar cost average into as well. Thank you guys for staying throughout this entire video and showing love on every single video as well. Next week, we got some really great videos planned, so make sure you subscribe with post notifications on so you don't miss any future videos coming out this week. Also, if you want to join my close friends list where you can see exactly what I'm buying, when I'm selling, and everything in between for options, expiration dates, strike prices, swing trades, long-term trading, go ahead and message me here on Instagram, The Daily Stock Market. I'm taking a few more people on this week for my close friends list so you can see exactly what I'm doing and follow along with my trades. It's made over 1,000 success stories now, and if you want to read some for yourself, click on success number 8. Read through some of those success stories. Now over 1,000 positive testimonials. Thank you guys so much for all the love and support. Share this video with a friend if you think that they will find value in it. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.